There are no shortcuts to building wealth today. It takes time, effort, sacrifice, and diversification. But today, diversification means something different than it did in the past. You deserve a more secure way to protect and grow your wealth. At Delta Harbour, we take this to heart. Our mission is to help by inviting you to add physical gold and silver to your wealth strategy. Book a free consultation today and let us show you how to protect and grow your wealth through the ownership of physical gold and silver. Let us show you the Delta difference. Hey everybody, welcome once again to Hard Money. John Scholes here, of course. Darren Long from Delta Harbour Assets, reaching out anytime. Right away, we give you the phone number because we're good like that. 1-877-323-GOLD, 1-877-323-GOLD, deltaharbor.com, deltaharbor.com. That's Harbor with a U, of course, because number one, we're Canadian. Number two, this investment is all about you. If you've not explored the benefits of having hard assets in your investment portfolio, and by that we mean physical gold and silver, not paper, not certificates, not promissory notes, nothing, like physical metal you can pick up and drop and show your friends. It's all available to you in increments and different amounts. You want to explore, you can do so. Good way to start, either by calling Darren and his team or the e-store. How about that? Super simple. You can do it on your phone, your desktop, your laptop, whatever you prefer, your tablet, and start investing today. But lots to get through on the show today. Darren, as you know, it's another week and more interesting stuff is always going on. Insider selling, a new cycle begins. That is the title of this show. So I want to start today's show with that topic, which means you've kind of coined insider selling. Piques my interest for sure. What do you mean by insider selling? Trading we get, but selling, what do you mean by that, pal?
Well, the story's unfolding as we speak, John, and I'll welcome everybody to this week's show. We're happy to have everyone aboard, especially all new clients. And thank you for their value to our firm. And I say value with a strong word. We'll talk more about it in the show, but welcome them aboard and glad to have everyone here listening. But the story's unfolding, John. Insider selling is basically just one of those hallmark signs we look for when we're certain that something might be on the brink of changing. And so we titled the show today, Insider Selling, and a new cycle begins. And the reason it's piquing everyone's interest is because not that there's insider selling not happening every day, there is, but it's who is selling. And as our listeners probably know by now, gold has popped up over the last couple of weeks from around the 1750 to 1780 range up to where it is today at around 1860, while silver in that same 2 weeks has moved up from around 2350 to 25. And it doesn't just do that, for no reason at all. So when we talk about insider selling, we're talking about the likes of Michael Burry, the movie The Big Short. This is the fellow that they made the movie after. He has halted buying and reduced his portfolio. We're going to talk a little bit about that. Elon Musk, they say it's tax related, but I think we know better. We don't believe this. He has liquidated Tesla stock in the last couple of weeks, billions of dollars worth of Tesla stock. Jeff Bezos, Amazon, he's liquidated $2.5 billion, says there's a reason for it, as they all do. But again, we're going to examine that. And then, of course, the granddaddy of them all, Warren Buffett, Berkshire Hathaway, who, of course, he co-founded a long, long time ago. And Warren Buffett is kind of the big, huge granddaddy of all stock investors of all time, the Wayne Gretzky of stock investors. He's halted buying and he's stopped for a reason, because he believes the market is overheated. And that begs the question, what do they know that you and I do not?
Well, I mean, that is it, the $1 million question, right? What do you believe is the reason? If you sift through all the BS that people are getting on the mainstream news, what do you think is really going on?
Well, according to the latest inflation reports, like we saw on last week's show, the U.S. inflation rate's now at 6.2%. Okay, that's a problem. Now it's an issue. Now it is a recognized serious problem. It's not transitory. It's here to stay. Look at the reports out there telling you that the norm of the chain of supply is not likely to return until first or second quarter 2023. And you will understand why 6.2% is a problem. Because if they acknowledge that it's 6.2%, then what is the street rate? 10, 12%, 12, 13, 14%. It's a 31-year high. And it means here in Canada, we also are experiencing the same problem, which means street level inflation in Canada is around 8 to 10%. Insider sellers, they know this. Their pulse, they have their finger on the pulse every single day of the week. They're making changes to their wealth strategy well before anyone else catches wind of what is happening. You've got 10 plus years of a recovering stock market with multiple highs taken out all over the place on numerous occasions. You've got the lowest interest rates for the longest period of time in modern history. You have the highest amount of money ever printed, leading to the highest amount of debt we've ever had. You have a gaping hole between the haves and the have-nots, which is literally growing by the second. You have the now shrinking middle class, and our purchasing power is being blown to smithereens, John. I mean, Elon Musk, they say that the reason he sold Tesla stock was so that he could pay a tax bill. I mean, this is a man who has money coming out the yin yang everywhere. He doesn't need to sell Tesla stock. Not if he believes it's going higher. He doesn't make stupid decisions like that. He's not a stupid investor. Yet here he went selling Tesla stock. And most insiders that are watching this will tell you he believes that the American economy is overheated. So he's taking a piece off the top. Given that Tesla has had such a tremendous rise in value, and it's far more, I mean, it makes way less than any other car manufacturer domestic, the majors from GM to Ford to all the others. Yet it has the highest valuation as a company on the face of the earth for car manufacturers. Bezos sold $2.5 billion worth of Amazon stock. And in doing so, he claims that that money is to be directed towards his restoration of nature and transforming food systems as part of his Bezos Earth Fund. But time and time again, I mean, we've seen through this. I mean, how many times does somebody of elite status like a Bezos or anyone else start a fund and through the fund do the craziest things, redirecting money all over the place, all in the name of doing something good for humanity? And this is the case. Warren Buffett, Berkshire Hathaway bought only 3 stocks in the third quarter. 3 stocks. They haven't had that little amount of movement in years. Buffett is no doubt eyeing the stock market right now, and he's looking at the stock market's evaluation, which is at its highest level in 20 plus years. And then there's the hedge fund manager Michael Burry, who mentioned from the movie The Big Short. That's who they made it about. This guy predicted the 2008 crash. He's been a busy man lately too. In quarter 3 of 2021, he reduced his common stock holdings in entirety in his total hedge fund from 137 million down to 42 million in his overall exposure. And that's because Burry believes the stock market is way overheated. And I quote from his words specifically, "All hype speculation is doing right now is drawing in retail investors before the mother of all crashes." And he wrote that in a tweet earlier a couple of months ago, and he deleted it ever since.
What does it mean? What's he trying to say there?
He's trying to say we're going to crash. The mother of all crashes is coming based on all of this artificial growth that we think was organic and that we think was good, solid economic growth, which wasn't. At the end of the day, we built all of this mountain on debt, and we can't live on this for very much longer before it collapses. He's seeing it. We're going to talk more about it in the show, but ultimately, everybody is very, very concerned about this right now.
Yeah, I mean, one thing you always do in this show, Darren, is forecast correctly for the most part, and it's wise for people to listen into that for sure. We're going to get into a little later on, of course, how you can start this physical metal portfolio, an investment that's been around for literally thousands of years. The days of pharaohs, they've been doing it, so we should be doing it now as well. We'll give you details on how to get started if you haven't dipped your toe in already. The number anytime, 1-877-323-GOLD. Again, 1-877-323-GOLD. You can go to the e-store to start investing, of course, and follow all these videos on YouTube and reach out to Darren and his crew as well, deltaharbor.com, Harbor with a U. We'll continue. This is Hard Money, coming right back on Sauga 960. All right, welcome back to Hard Money. Darren Long here, of course, is steering the ship of your proper investment. Where are you going to take that portfolio? Into an iceberg? No, don't do that. Everybody's currently headed there, so don't go down with the ship like Captain Smith. Stay with Darren and get some precious metals into your portfolio. I'm not talking about tickets and papers and all that stuff. We're talking about actual physical metal in the form of gold and silver. You can store it, you can hold it, you can keep it at home, you can use it to lift weights, whatever you want. It's physical metal and it could be in your portfolio. You don't know how to do it. Here's how you're going to start. You're going to make that phone call, 1-877-323-GOLD, deltaharbor.com. That's a good place to start, and get onto the e-store as well and start investing, have a little nibble, and continue on from there. But anyway, more details, Darren. I know you lay it down better than anybody. How do we get some silver and gold into our hands for that portfolio from Delta Harbour, of course?
Well, like you said, John, the first place to start is obviously the website, deltaharbor.com. And there you will find all of our different ways of owning physical bars and coins of silver and gold laid out for you. Specifically, there's a great section on all the comparisons between the account types, whether you want to take it home directly or store it. A storage account does mean it's segregated and allocated to you. You will get the benefit of a inventory report, and you will have access to be able to take those metals in and out of there and see your metals in the storage facility. In addition to that, you also have the option of putting metals into your registered accounts. We're going to talk about that later in the show, but you can put gold and silver, physical bars and coins into your RSP TFSAs, and you may already have an account, an RSP, a TFSA at another institution. Bring it over. No problem. We'll show you how to do that. It's very easy. Stays under that umbrella. There are no tax implications for doing so, and it will allow you to put gold and silver into your portfolio using Delta Harbour, and you can buy and sell it just like a stock. That's the beautiful part about it. And then, of course, we offer the bulk bullion collateralized financing accounts. Basically, that means if you don't care that it's a bar or a coin, or if you don't really want to have or hold on to any actual bars or coins, maybe you just want it in storage, you want to know that it's there, you want to know that it's being audited, but you don't care about holding it or seeing it. And even better than that, you might want better bang for your buck. Well, the bulk bullion account might be free. You can leverage up to 80%. You can finance up to 80% of your purchase through that program, and our website will detail that in much greater degree than I can, John, through this show. But ultimately, it starts with that website, deltaharbor.com.
Yeah, and the phone call, 1-877-323-GOLD, if only to have a chat and familiarize yourself a little more with how the process works and what these metals are all about. Call Darren or Rob and the rest of the team, Roy. They'll talk to you and set you up straight. Again, and we're talking about physical metals here. I mean, no stone unturned. You've given everybody a ton of options, from just coming and picking some up to storing it to investing and using the bulk bullion. And of course, your registered accounts are fantastic as well. That all through your very solid partner with Questrade. But you know, we try to every show dip into interest rates, because this is still a massive topic, even on the mainstream news. Doesn't matter where you go, everyone's talking about it, interest rates and financing and mortgages and borrowing, et cetera, et cetera. So what happens, I guess you could say, when interest rates go higher, but you could replace that, how soon they're going to go higher. But what's going to be the net effect of that, do you think?
Well, the simple truth is that when interest rates go higher, both businesses and consumers will start to cut their spending, and that slows an economy drastically. It'll cause earnings to fall. Stock prices will slowly peter back. And again, that's assuming there's no other hiccups along the way. That's just a normal rate raise, like we saw in the early 2000s, when we saw that spending start to be more razor focused on different areas as opposed to being generalized spending over all consumer trends. We saw it tighten up and move into areas like real estate and others. We've already gone through the real estate boom, and I mean, we're going to talk about it later in the show, but as interest rates move up, the cost of borrowing becomes more expensive. This means that demand for lower yield bonds will drop, which causes their prices to drop. That's a big part of most portfolios right now. Higher interest rates make loans and mortgages more expensive, John. Homeowners in cities with high-priced real estate, Vancouver, Toronto, and other cities, now pretty much all of Ontario, as it's the most overvalued province in all of Canada, become more expensive. And you'll, in some cases, with small interest rate hikes, be paying in the hundreds of dollars more per month, which bites right out of your disposable income. That's income you could have been using to pay for lessons for the kids, to buy clothes, to go on that once a year trip with the family, to do some travel inside our province. All those things start to peter slowly down. And as that happens, we get closer to recession. And generally speaking, in a normal recession, without major hiccups like we saw in 08 and what we're going to see, the government steps in and they'll act accordingly. Those interest rates can't just go, 400 or 500 points higher overnight. They have to happen slowly, so that if there is that threat of recession, it happens slowly over time. And higher interest rates also affect credit lines and car and student debt, which coincidentally since 2008 have been the fastest two areas of growth. Again, I digress a little bit, but this happened in the 70s. So anyone that was alive during that time and was a parent during that time, managing money, managing wealth, or just trying to look out for their own interest, they saw this happen. When it did, home values went stagnant or lost value. Again, it happened in the early 90s. We saw the same thing occur. Spending slowed, economic activity slowed to a crawl, and we hit a recession at a time when the cost of living in the 70s went much, much higher. Due to primarily double-digit inflation, which we don't want to get to, but at the street level, we're getting very precariously close to. I mean, everything we put our fingers on right now is costing us more. How long that lasts and at what rate do we continue to climb, we will only see as time permits, but we believe that it's going much, much higher. And during the 1970s, of course, what happened? Gold rose almost 2,400%. Silver rose almost 2,000%. Both metals ran up for the better part of the entire decade.
Again, the number 1-877-323-GOLD to reach out to Darren and the team. It's funny you mentioned back to the 70s. You and I were both around the 70s. I mean, we were kids, but I think the difference is if you mirror what's happening now and it's going to be happening in 2021, 22, 23 and onward compared to the 70s, the ease of availability for people to spend and get over their head now is so much easier. I mean, a kid, my daughter's 13. If she wanted to, she could somehow finagle a credit card into her wallet. She could probably open up a stock portfolio with her cell phone. I mean, 70s, it was a lot tougher to get into trouble. My parents didn't have a credit card. Why would they? They just bought when they could afford things. Now, no dice, man. Everybody can get into serious debt. So to your point, I think this one's going to be a lot worse because there's so much more availability for cheap stuff out there and to get yourself into trouble, right?
Well, that's just it. We're going to talk about it in the next segment, but it is a mirroring image of the 70s. Oh. Oil prices are creeping up. Food prices are creeping up. Car prices keeping up. I mean, recall the move to smaller engines in the 1970s, right? Yeah. It was supposed to be a time in which we take care of one another with this greener image of what the future would hold for smaller engines and less gas usage because we thought we were at peak oil. Well, it's similar right now to the move to EV autos, right? We're going to electric autos, and the difference is that car prices are heading up, not down like they did in the 70s. I mean, look around you geopolitically. In the 70s, we had the Russia-Afghanistan war, and we had the Iran hostage situation. Here at home, we had the FLQ problems. I mean, a few other things like that. We didn't have major concerns around the world geopolitically, and now we do. Now we have domestic terrorism. We have embargoes galore. We have multiple countries falling apart due to inflationary pressures. I mean, do we ever hear about Greece, Cyprus, Venezuela, Iran anymore? We don't. And back then, when gold and silver rose to their highest all-time prices, there was a fraction of the population to own it. And now we have a few extra billion potential investors. So the 70s, the monetary base doubled. And here we go, since 2008, 6 times higher. And it's a much shorter span of time. And all of these things coming to fruition beg the question of whether or not we see similarities. Sure, we see all of them. They're the same. And we're going to sit here and say, hey, there's nothing that's going to persuade us otherwise that gold and silver are going to be a huge part of protecting wealth, of growing wealth, and of common sense wealth strategy going forward from here. So you have to own these assets, or at least rule them out and have a real logical reason not to own physical gold and silver at this particular time.
That discussion continues. Short break, though. 1-877-323-GOLD and deltaharbor.com. We'll get right back to it. Hard Money, Sauga 960. All right, welcome back to Hard Money. Good to have you along on the show this week. A busy one. We are full of information, things to tell you. And of course, we're going to slip in there as well throughout the remainder of the hour how you can get your portfolio up and running with Delta Harbour. Get some physical assets, gold and silver, into that portfolio. Switch gears from what you've normally been doing if you haven't started already, and get educated and throw yourself a bit of a lifeline. The 70s, let's look back at that as we were just before the break. Darren, a lot of similarities occurring right now. Remind you of the 70s. Give me some more of those. The laundry list I know you've been putting together, right?
Yeah, well, we're talking about the difference in terms of the four fundamental food groups as far as silver and gold are concerned, which is currency, inflation, geopolitics, and supply and demand. And all four of those major variables were hit hard during the 70s. And that's in part why gold and silver did so well in the 1970s, because they were part of that mentality that of people that wanted to protect their wealth, that wanted a hedge against what they were doing. And it didn't mean that everybody ran out and owned only gold or only silver. They maintained their wealth strategy. They owned their paper assets. They had stocks, they had cash, they had bonds. But, with the burgeoning of mutual funds, that was a growing area, and gold and silver did really well. And again, remember, back then, there was no way to trade it electronically. You had to pick up gold and silver from the bank or from the coin dealer and bring it back to the coin dealer and the bank. You didn't have the ability to put gold and silver into a registered account. You didn't have any of those options. And as I said, in the 1970s, we saw the monetary base double in the U.S. Again, the reserve currency is what we're watching and paying attention to. And now, since 2008, since Obama took over from Bush, we've had the U.S. monetary base rise sixfold. And that 40% of the money ever printed in the entire history of the U.S. has been printed within the last 60 months. Within the last 60 months,
40%.
Yeah, 40% of it. So do I see similarities to 70s? Yes. It's the 70s on steroids, for Pete's sakes. But the difference is gold and silver, is only still about 1 or 2% of all globally managed assets. And that's in paper and physical, not just physical. That's of all investments around the entire world. Only 1 to 2% of it has exposure to gold or silver. So what happens when just 3 or 4%? The average dictates over the last 100 years in bull markets that we move towards 20%. In fact, in the 70s, it moved towards 25%. But ultimately, what happens if just 4 or 5% of the world's investing population seek exposure to gold and silver? Right. Price of gold rises 10,000 plus an ounce. Price of gold silver $400 or $500 an ounce easily. And then that's in the blink of an eye. That could happen within a year, 2 years. So I'd love for our clients to be part of that wave, get their silver now while it's still cheap, get their gold while it's still cheap, put it into their portfolios, sleep well at night, put their head down their pillow, knowing that they've protected their wealth, they've insured their wealth, they've taken care of their family.
Again, 1-877-323-GOLD. Simply call that number, have a chat with the Delta Harbour crew, including Darren, and go to deltaharbor.com. It's funny. I want to move on to, physically brass tacks, how you get gold and silver into your hands as a client of yours. But, you were just talking about the demand for gold and silver. I remember a few years ago, you and I used to do this show, and it was when things start to get sticky like this, countries like China and India get hot for gold and silver. And the problem is they have massive populations. They can suck up a lot of gold and silver. So that could leave the rest of us out hanging dry, man, if they decide to go heavy on physical metals, right?
Yeah, and again, you identify a common concern within the bullion industry, which is that we don't have a lot of recycled bullion coming back to North America, which is a problem on the supply and demand side, because this represents yet another year, the majority of them, probably 15 of the last 20 years, in which we're going to see a deficit in the silver market. And that's because we're not getting enough product back into it through recycling, because countries like China, where all the major recycling is done, they hoard the product. They don't give it back anymore. It stays there in the country. But in addition to that, you have the likes of Russia and Brazil and other countries like that. Venezuela right now, do some research, see how they're surviving. Things in Venezuela are beginning to be priced in gold grams.
Come on.
Yeah, gold grams.
Wow.
Right, which means their currency has failed. And for those that can afford it, that were smart enough or astute enough to have gold to begin with, they're now paying for bread and for milk and for their daily needs using gold grams. So this is a a moment in time in which, the media closes off these avenues. Unless you search for this information, you won't find it. But when you do, you will see, and it should surprise nobody as a listener of this show, that is, certainly not something that we advocate. We don't dig bunkers in our backyard and plan to take lots of food and water into the bunker because all heck's going to break loose. But what we do say is that, look, in a microcosm, in a vacuum world where globalization moves things so quickly, tomorrow could be a different day than today, and it could happen overnight in a blink of an eye. Why risk the pulling back of a stock market, being in recession and losing half your wealth because you didn't want to investigate for 20 or 30 minutes an asset like gold or silver? I think that's where the value is, John.
Yeah.
Take some time, go to our website, take a look at it. You'll be pleasantly surprised. I mean, you're owning an asset which has averaged in gold over 10% per year every single year overall, cumulatively, since I've been in the market since 2004. In silver, you're looking at an asset that's 9 to 10% every year cumulatively since 2004. Does that mean that every year is a winner? No, but it also means that not every year is a loser either.
Yeah.
I mean, last year was huge year for gold and silver, and this year I believe both metals will be on the positive side, but maybe they're not quite as high as last year. But overall, it works out to those lovely averages, which A, beat inflation, and B, give you an alternative in your portfolio to those paper assets, which at the blink of an eye could change tomorrow without warning.
1-877-323-GOLD is the way. Make that phone call, or like Darren said, simply go to the website, do some research, spend some time, pour yourself a coffee and sniff around there. And the e-store, if you want to get started right away, since you're already on the website, that is also an option, deltaharbor.com. Getting gold and silver into our hands. Let's go through some of this again in the last few minutes of this break, Darren. Open up a portfolio. What happens then?
Well, we've got an e-store. You can start there,
Yep.
John. Go to the website and buy through the e-store, register. The details are all there. The payment options are all there. Lots of easy ways to do it. And that's for simple purchases. Anything under 5,000, you just use the e-store. It's a great way to do it. And if you want to take it to the next level, we'll also deliver it to you. But if you're over 5,000, you want to spend a sizable amount and put it into storage and keep it safe and keep it liquid, being able to be bought and sold by telephone, we'll set up a storage account. We use the finest storage facility in all of Canada. It is fully insured 1-to-1. It is not the only option you have for storage. For those that are listening that want to diversify their holdings into other parts of the world, we take care of that as well. We can set that up for you, but storage is still 100% liquid. You can buy and sell on a phone call. It's very easy to do. You can add and subtract, and you can get inventory reports with the assurance that your product is 100% fully insured and easy to move around the world as well. In addition to that, registered accounts, put it into your TFSA. Take advantage of that. 75,500 plus whatever we get in the coming months, another 5,000-6,000 to add to that. Put it into a TFSA. It's tax free. So if silver happens to double in price, typically you'd pay capital gains on that gain, but in a tax-free savings account, you pay no gains because that is what it's for. So you can put some silver and gold into that in physical form, as well as RSPs, spousal RSPs, heck, registered education savings plans. Start small, start adding every couple of months, every month, every quarter for your kids to prepare for college, and do that as an option as well. But ultimately, there are lots of options at Delta Harbour, and you can get that ball rolling. Registered accounts is just one of them. But we're there every step of the way, John, to help you hold your hand through the process. And hey, gold and silver, it's where it's at right now. It's the best diversifier of wealth on the face of this earth, and I will prove it. Call me. I will tell you why.
I want to get back into those registered accounts, but we got to take a small break. We'll do that now and get back from it. 1-877-323-GOLD, deltaharbor.com, and YouTube/Delta Harbour as well. You want to watch past shows of this nature. They're all there for you to do your homework. We'll continue Hard Money on Sauga 960. All right, everyone, welcome back to Hard Money. Thank you so much for tuning in today, getting a hold of Darren and his team. You want to discuss gold and silver, physical nature, physical metals in your portfolio. You can either take them home, go buy them on the e-store, have them delivered to you, get into the storage facility, get them into your registered accounts, which we'll talk about a little later on. TFSAs, RESPs, RRSPs, LIRAs, you name it. They can do it through Quest Trade as well. They're partnering in all this. I read a report this week that mentioned consumer spending was up, which indicated to me that this could be a positive development, Darren. But then I thought about it and realized everything is priced higher. Of course, the spin doctors in the media, all media pretty much would say consumer spending was up. What is your take on these type of headlines? Doesn't matter where you look, paper, online, internet, TV, they're all playing, reading from the same hymn book, right?
Well, it's absolutely true, John. And unfortunately, it's just a outright lie, especially when inflation takes over. Look at a good website, Zero Hedge. Don't take my opinion for it. Zero Hedge, they report a lot of what is behind the headlines, and I like it for that reason alone. Some doom and gloom there. I will warn you ahead of time. However, they do report on things like this, and they had an article this week called "Booming Retail Sales Don't Necessarily Signal Strong Economy." And you'd think this would be common sense, John, but I think most of us want to believe that there is good things on the horizon. We want to be happy.
Sure.
We don't want to be negative and worry about things and not be able to put our head down on the pillow at night and sleep soundly. But this article said that, in fact, retail sales in the US climbed higher than expected in October, rising 1.7%. And the mainstream did, in fact, report this as fantastic news, signaling among other things, that the economy was on solid ground, that they were looking for growth. So this, again, it would appear that the American consumers are out there buying lots of stuff. The stock market rallied alongside multiple highs again this week in several of the different indexes in the US, and that all is well. But the mainstream narrative, and this is the Zero Hedge article talking, and I quote, "The mainstream narrative isn't giving you the full picture." In fact, the article goes on to say, there are two important factors to consider as you analyze these surging retail sales numbers. First, retail sales aren't inflation adjusted. The data just reflects the amount of money Americans spent on retail goods. It is as much an inflation indicator as it is a sign of strong buying patterns. For example, if you think about something that we buy every single day, a laptop, and consumers go out and buy 100, Acme laptops in a month for $1,000 per laptop, spend $100,000. Pretty simple. And the next month, they only buy 75 laptops, but the price rises to $1,500 per laptop because of inflation. Retail sales would show a 12.5% increase, but the consumers only bought 75 laptops, not 100 like the month before. The number of actual units sold fell, even while the dollar sales went up. So this isn't a sign of economic strength at all. It's just inflation. And consumers are buying less, but they're paying more. But the mainstream can still spin this as positive, and they do. They claim that the fact that consumers are still spending lots of money despite inflation means they're optimistic. And the article goes on to say it signals the economy is healthy. People wouldn't spend if they didn't have any money, right? Or would they? And the article says, that brings us to the second point you need to keep in mind. Consumer debt is on the rise. Americans might be spending, but they're putting it on plastic. Remember earlier in the show talking about your daughter getting a credit card, right?
Yep.
Without stimulus money, Americans are buying stuff the good old-fashioned way, John. They're just charging it, right? And as Peter Schiff explained it this week, Peter Schiff of Euro Capital, huge gold and silver proponent and somebody that we respect in the analyst community, he says, and I quote, "Higher prices and an absence of stimulus checks forced Americans to borrow more to buy stuff they can't afford." It's the same thing here in Canada. As stimulus wears off, people don't want to arrive at the holiday season without a good present or two in their pocket to give to loved ones. So what do? Instead of CERB paying for that beloved PS5 console, we put it on plastic, right? Charge it. Clearly, this isn't a sustainable economic model, and don't let the mainstream spin fool you. That's the bottom line of this article. And it finishes by saying, booming retail sales don't necessarily mean what they're telling you. In reality, it's just a predictable function of a post-pandemic economic recovery based on stimulus and debt. That's all it is.
Pretty scary. 1-877-323-GOLD. Anytime you want to reach out to Darren, discuss these topics or anything else, you can do so. You can go back and look at this episode on YouTube as well, youtube.com/Delta Harbor, and the website, deltaharbor.com as well. And that contains what we want to talk about for the next couple minutes. And I know you're really excited. Recently launched the e-store, makes it so much simpler for people from their own home. Like I could right now while we're talking, get into the e-store and make a purchase of some physical metals. So tell me a little more about that portal, pal.
Well, this is something that we've been working on for a long time. My partner, Robert, oversaw this project to a T. And although we've been tweaking it all week, putting up some product, taking away some product, making sure supply and demand and how it impacts inventory is adjusted, and getting those finishing little touches on there, this is a fantastic and easy solution for our clients. And again, this is resembling a lot along the lines of what you would find in a traditional online store for any retailer, an option to buy in smaller increments for yourself to be sent home or stored. And again, you'll see our product online through the e-store, and the ease of use is pretty good. I rated it a 10 out of 10 myself. Again, I'm a little biased towards it, but I've used a lot of different e-stores in my day. I've shopped around, looked at a ton of them, and our team got together and worked really hard on this project. So kudos to Rob. And this is something that we are very proud of. It has ease of transaction and ease of payment. We are now on every major banking institution and credit union as a bill payee option. So all you have to do is select your product, put your details in there, and you can take home your bullion in a few days and simply make the payment by using an online transaction like you would any other bill payment. And all the traditional payment options are still there as well. But ultimately, this is the ease of transaction that we want for our clients that are buying. And it happens by getting to the website. John, I think this is an explosion of sorts that's going to happen. And it's a big one. It's a really, really big one. And I don't think that we're ready for it, but I think that people can take advantage of this, get into the gold and silver market, get themselves some bullion into their wealth strategy, take care of their families by having this diversity inside of that wealth strategy. And gold and silver, I mean, I'm thinking they could be skyrocketing in the next 60 months. What say you as a viewer and as somebody who's been with me for a long time? It sure feels like this is about a change of a cycle. And when the insiders start selling, you know how it goes, do as they do.
Yeah. Lots more information to give you. We're going to talk about opening that portfolio and see if everybody else outside of this show today is starting to wake up to the reality of what's going on in the economy. But first, we got to take a small break, give you some time to catch your breath and reach out and write down a couple numbers and some contact. DeltaHarbor.com. That's Harbor with a U. All one word, deltaharbor.com. And then 1-877-323-GOLD. That's the number. Quick and dirty. Call them up. Have a conversation with Darren and his team and get that part of your portfolio up and running and fill it up with some precious metals for sure, physical metals of that nature for sure. We'll take a short break, get back into it. We've still got a few minutes to go here. This is Hard Money. We'll continue on Sauga 960. All right, welcome back, Hard Money. Good to have you along. The show has gone so quickly today, Darren. Lots to talk about, but we still got a few minutes. And by the way, in the meantime, want to reach out while we chat or after. 1-877-323-GOLD. Really simple number. DeltaHarbor.com. DeltaHarbor.com. Harbor with a U. And while you're on the website, you can click on the e-store, which is fresh and new, and it's right there. Ease of use. To get some physical metals into your portfolio, you want to keep them, have them delivered to your house. You want to pick them up. You want to put them in the storage facility. It's up to you. It all begins with some research and some clicking away on the e-store, deltaharbor.com. But latest, I know you love talking about this. We try to do it every show, at least for a little bit. And that would be the latest news from the real estate front here in Ontario, pal. What do you think?
Well, John, our friends over at Better Dwelling, it's the website we really love. They just released a great article this week called Ontario Real Estate is the most overvalued in Canada. Slow growth expected, Moody's. And this is on the heels of a report from Moody's, the rating agency Moody's. And the article starts with exuberant Canadian real estate buyers sent home prices soaring during the pandemic. Now some provinces have severely overvalued housing markets, according to Moody's. They picked on Ontario in this article in particular because its prices were the most inflated, and I don't think it comes as a shock to anyone. Nobody can afford a house anymore, and I don't mean to chuckle about it, but you know,
Yeah.
writing was on the wall a long time ago. A year ago, we were saying that this is going to be the end result, that no one can afford anything. And here it comes to fruition, right? If you want to sell a house right now because you got lots of equity in your home and you think you did really well, where are you going to move? Right? Where are you going to go? Can't take a move one town north of you to get those lower priced real estate options, because the one town north of you is the same price as is the 4 towns north of you. It's all come to full tuition here, that this is a problem, right? And the article goes on to state, and I quote, Ontario real estate is the most overpriced in the country, surprising no one in the province. They estimate the province's real estate market is 22.6% overvalued in Q2 2021. So it's now Q4. What is the overage value going to be now? That prices haven't dropped, right? We've seen the amount of listings go a bit stagnant, colder weather coming, but the article goes on to say, and I quote, they see prices rising 1.3% next year and showing an average annual growth of 0.3% over the next 2 years. Elevated inflation can make this a significant correction over that period. That's Moody's saying, hey, if all else goes well, if it all goes perfect, if inflation is transitory, if we don't have a stock market crash, if there is no recession, expect 1.3% gain on average, over the next year or two, which is nothing. And generally speaking, Moody's doesn't expect a sharp crash in a normal scenario. It's not in their base case forecast anyways, which is basically what would happen with any hiccups. They see overvalued housing markets with slow growth or mild declines, but that's not the case. Though no asset market ever sees price crash when people think it's possible, because that's the truth, right? When people are aware of the risk, they can move to mitigate it and lower exposure. It's only when people see no risk that they become overexposed and amplify those shocks. And John, this is exactly what's happening. This is irrational exuberance in a real estate market. And if you're a real estate investor listening right now, you have an option to continue to invest in real estate at these very heightened prices, or to get a little bit of diversity into that portfolio. Hold an asset which does not have all the fees of real estate, which does not involve lawyers, which does not involve red tape, which does not involve plumbers or HVAC people or any other number of professionals that have to come in and evaluate the worth of the property or make changes to the property. Own some gold, right? Put it in your safety deposit box. Don't think about it again until the price is double what it is right now. Bring it out, sell it back to Delta. It's pretty simple, as opposed to buying a house and having to sweat over it because you might have bought it at the very peak and then watch it start to lose value and hope you're going to get those renters when renters start to refuse to pay those exorbitant prices that you want for that rental unit, which we all know is happening all over Ontario. So you might as well think twice about it when you're going to go spend that next dollar, because ultimately, John, I think we have an awesome opportunity right now, and it involves diversifying your wealth strategy using physical gold and silver.
Well, it's the B word, balance, right? We always talk about it. So in addition to maybe having a stock portfolio, maybe some real estate holdings, if you haven't got out of those already, would it not be a good time to maybe get other assets like physical gold and silver into that portfolio? I'm not saying that just because of this show. I'm just saying, if you and I were sitting around at a coffee shop talking, I mean, isn't it not the correct thing to do, or at least a smart thing to explore?
Well, I think it is, because people who invest in gold and silver understand that their purpose isn't to provide a dividend. Their purpose isn't to live in, or it's not an edible item. They get all those things. They don't invest in gold and silver because they think it's like a stock or acts like a house. They get into gold and silver as a way to protect themselves, to protect their wealth, to ensure their wealth. But when times get tough, when recession or when the economy breaks down a little, or when we see what we saw in 2008, then gold and silver go crazy. And I mean, that's historically true. And there's nothing that anybody can do about that. So it's very prudent. And I think gold and silver are, in fact, the most uncorrelated two assets in the entire face of the earth to your traditional investments of stocks, cash, and bonds. And I'm not the only one. I mean, there's been numerous studies done that show that gold and silver are an excellent way to diversify your portfolio. But just think about it from the perspective of 2008 to 2011. So we have a massive crash in the US. Okay. The whole world goes to hell in a handbasket. and we have recession, and debt starts to pile in, interest rates start to come way down. In the next 36 months, gold rose from a low of 650 to a high of 1920, 200% in 36 months. Silver was gold on steroids. As it usually does, it rose from a low of 850 to a high of $49 an ounce, or a bit better than a 475% gain in 36 months.
Jeez.
The difference is the economy has not crashed just yet, but gold and silver now in 2021 have already started to move higher, much higher. Just last year, you could have bought silver for under $12 an ounce and gold under $1,500. I'm sorry, John. I get excited when I talk about this because the best is yet to come.
Yeah. Well, like a friend of ours once said, an animated friend, you just buy it and keep it gold for your golden years, right? Which is generally what you do. You're going to have yours for a long time. It's not going to go anywhere. So I'm not surprised you're super excited about it, Darren. And we continue to tell people that as they tune into the show each week. And again, congratulations to those who have decided to dip a toe in and start that portfolio with Delta Harbour. Good on you. It's going to be good for your future. And if it's something you could spread around and get a little more action on, you could do that anytime. Here's how we're going to do that. You're going to do that as we wrap up for another week. Make that phone call, 1-877-323-GOLD. Really easy to remember, right? 1-877-323-GOLD. DeltaHarbor.com, Harbor with a U, because this investment always is about you and expanding your current portfolio. And you can go to the e-store online once you get to the website, and you can also have some contact information with Darren and the crew there as well. We'll take it for another week, but there you go. You've got all the information you need to explore, and we'll hook it up again next week with you. Hard money right here on Sauga 960.